Hey, I'm Robert Heidemann from Delmar Mortgage, continuing our June home ownership month, bringing you some more information. I am here with Kelly Hendricks, the Senior VP over at Delmar Mortgage, and we're going to talk about underwriting. So previously, we've talked about how you, the homeowner looking for a mortgage, you have to work with a lender. We gather all your personal information. It then goes to processing, who has to validate all the verbal information you have given us. And then it goes to underwriting, that dreaded underwriting department. So Kelly, one of your roles here is you oversee underwriting. So why don't you tell everybody, what is underwriting? What does it mean? What do you guys do? Why do we need it? And for everyone, why underwriters always ask for more documents.
That's your favorite part of the conversation.
Yeah, you know what it is.
Okay, so underwriting is the department that validates all the information on the application. So you as a consumer, when you're providing that information to your loan officer and your processor, it's all going onto a loan application. The underwriters essentially validate all the details on that application with supporting documents. So we're looking at the bank statements, the income documents, your credit report, and making sure that we got all of our I's dotted or T's crossed and that your file meets the guidelines. Both for the program you're qualifying for as well as any regulatory compliance that's required throughout the process.
So you mentioned making sure we comply with the guidelines. Whose guidelines? Why do we have to worry about guidelines?
So depending on what loan type that you have applied for, conventional, FHA, VA, USDA, they have their own specific guidelines. So that entails things like how much of your income can go towards debt, how much of your income can be allocated towards your housing payment, and how much do you need left over after the process. We're also making sure if your funds to close that they're coming from an acceptable source. Are they your own? And if they're not your own, how are we documenting where they came from? Are they a gift, an advance from a loan? Making sure that it's not any unsecured funds that would be ineligible to use for closing.
And the unsecured funds comes up every once in a while when a consumer says, hey, I've got a bunch of cash, the mattress money. That's very difficult because through the Patriot Act, we have to document where those funds come from.
While cash is usually king in a mortgage process, it is not. So if you have that cash laying around at home, make sure you get it into the bank before you apply for a loan and let it season for 60 days so that we can use those assets towards your purchase.
So we understand that there's guidelines, Fannie Mae, FHA, and all the others. Why do we even care what those guidelines are? Why can't we make the determination that we want to create a mortgage, forget about their guidelines?
Sure. So with most things with financing, we are lending money that is used to purchase a home, refinance a home. We have to make sure that you have the ability to repay your mortgage. And we do that by following the preset guidelines for the loan program you're applying for to make sure that when you get into that home, you're successful in home ownership and we're not putting a customer in a position to set them up for failure and a foreclosure down the road. So it's to protect us as the lender. We may be lending you $30,000, we may be lending you $2 million. And our goal is for you to pay back that loan and us as a lender not take that collateral back in a foreclosure because you weren't able to make your mortgage payments.
That's awesome. And to finalize and to finish up, that's perfect. It's your collateral. And one of the myths in the industry is when you buy a house, you don't own the house. The bank owns the house. This is previous generation talk. No, the truth is you are buying the house. We are giving you a loan because you're trustworthy, but you're pledging a piece of property as collateral. So like you mentioned, we don't want to have to take that collateral back by foreclosing on you. So you own the house. Be careful. We do our job up front. We're careful processing and underwriting your file to make sure you do have that ability to repay and home ownership works out well. Kelly Hendricks, thank you so much for educating us. I'm Robert Heidemann. We both work at Delmar Mortgage. You've been here 8 years?
8 years.
Been here 10 years, so we know a thing or two. So thanks for tuning in.